Silver futures in New York have gained over 2%, reaching the highest levels in 31 years. At one point today, it cost over $38.50 to buy an ounce of silver. Just checking in on what May futures is currently trading at. This is the picture for them. So just want to get the latest view now from the head of Commodities Research at Commerzbank, Eugen Weinberg, joins me from Frankfurt now. Thanks very much for speaking to us, Eugen. So tell me, are silver prices at 31-year highs justified?
It's difficult to say, but definitely they're well supported right now by investment demand as well as physical demand. On the investment side, the proximity to another psychological mark of $40 an ounce is definitely attracting some speculative interest. The risk on money are going into the commodities, which is also supporting the prices. Also, the safe haven, due to the fear of inflation, is also supporting the investment inflows. On the other hand, due to the economic upturn worldwide, the industrial demand for silver is staying also very strong. So for the time being, it should be well supported, especially given the proximity to the $40 mark.
So the rally is set to continue?
I wouldn't be surprised if in the next weeks we will see the prices trading between $40 and $45, but also the potential for a correction is also keeps building up because this all hot money are going now into the silver market. So I wouldn't be surprised if we enter into this trading range between $40 and $45 for some time, and then see a stronger correction to the downside. On a longer term, still, I believe that the prices will continue to appreciate due to the inflation fears, but also due to the very strong physical demand, especially from Asia.
But from what you're saying, we could see extreme volatility in the price of silver. Is that correct?
Yeah, the prices are already very volatile. They went up almost fourfold over the course of the last two and a half years. So this volatility is set to continue for quite a while. I think that it will be more volatile than gold, but also set to outperform gold, at least for this and next year.
So silver set to outperform gold. Talk to me now about copper. Because this is one commodity that could be in line for a correction, or it won't enjoy the same rally that it has enjoyed in the past because of Japan's earthquake, anticipations of an interest rate hike in China. Tell me more.
It's a little bit surprising that copper is not profiting from this less risk aversion, from more hot money entering the market again after the earthquake in Japan. Copper did underperform the stocks as over the recent days. I believe that the fundamentals for copper are staying very strong, and I believe that any fall, any correction below $9,000 should be seen as a long-term buying opportunity, and believe that the prices will appreciate as far as $11,000 by their end. Right now we are trading at around $9,300. Most of the problems should be arising from the production side, since Chile, the largest producer of copper, struggles to keep pace with a very strong demand from the physical side due to the economic activity picking up worldwide.
Yeah, so from what you're saying, we're going to see a significant rally in copper prices, at least in the second half of this year?
I believe that it will be already over the next months. For the second half of the year, we're not so positive because we believe that after the quantitative easing from the Fed is running out, the new inflows into the commodity sector will not be quite as high as recently. So I believe that the prices might be increasing already over the next weeks and months. And right now we're seeing more a correction due to the very high price gains over the recent months. So some investors probably preferred to lock in the profits and take them from the table.
Now, Eugen, you mentioned that quantitative easing. What about the possibility of an interest rate hike by the ECB, how might that impact silver and gold?
I don't think that it will be having a strong impact on the price of both, because they will be, on the other hand, they'll be profiting from the dollar weakness. You should be expecting dollar to weaken further if the ECB will be going on with the rate hikes and the Fed will be postponing these rate hikes. And I think that this effect, this weaker dollar, will outweigh the possible effect of the interest rate hikes in Europe. And the US market is still quite more important than the European market for the commodities.
Eugen Weinberg, Head of Commodities Research at Commerzbank, great to talk to you. Thanks very much.